From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. Earlier today, I talked with Brian Moynihan, Chairman and CEO of Bank of America. His bank has a special vantage point on the state of the U.S. economy with its extensive connections with consumers, as well as the full range of businesses, small and large. I asked Brian what he is seeing.
Commercial side, to take that first, the lending demand is down because the final demand is still shoring up. And so you had this panic borrowing. So if you came in through March and you had this panic borrowing where everything went way up and then it's come back down to that level. And it's basically back to, sort of back to where it was before the crisis and even a little bit lower. And that's a good news. That means companies, are ready to go as they start to see opportunities and the supply chain start to work and stuff like that. On the consumer side, it's been interesting. Where our basic belief, our research team, is that the United States will be down 4% for the year, and then next year will be up 5% or so. But the key is to think about it quarter by quarter. You had a deep drop in the economy last quarter. You're back up to where 95% of the economy is back, basically restored on a quarterly basis, and then we're going to work out from there. But behind that was a 1% to 2% growth economy. So the idea of it recovering that last 5 percentage points, tomorrow morning it's going to take a while to grind through that. Now the reality is every estimate, including you heard from Chair Powell yesterday, has gotten better rather than worse. And why is that? That's because consumer activity stays strong. So the fiscal stimulus, the monetary stimulus, the programs the Fed had, between the government administration, Congress, between what the Fed did, they basically, filled the hole, for lack of a better term, to bring the economy back up to level. And now we got to let it work out from there. And they probably need more stimulus for very defined places that are still in difficulty: restaurants, state and local governments, schools, performing events venues, some of the industries, airlines, and other things that you just can't have people do at the rate we had before. But the rest of the businesses, the dentist's office is back busier than they've ever been. So what do we see? Consumer spending is up year over year. That's up year over year, and that's good news. And so we're seeing it start to grow finally. It was growing at 10%. It fell, and it's worked us all the way back to even, and we'll see it probably start growing year over year. We're seeing it grow year over year so far in September. We'll see how we end up. So that's good news for the economy, meaning that amount of activity that goes on in our economy is restored.
Brian, you said it. Chair Powell said we're better off right now than we thought we would be at this point. But he also said there's a lot of uncertainty out there. And I'll name three of them. You mentioned one, fiscal stimulus, further fiscal stimulus. How badly do we need that? We have an election coming up. And by the way, there's the coronavirus. We don't really know about a vaccine.
And I think this is a healthcare crisis, and I said it back in March, and I said it even with you a few months ago in our interview. People can't forget that this is a healthcare crisis, and so what's happened over the last 6 months in the healthcare crisis has gone on longer than that is you're seeing the potential for a vaccine, but importantly, you're seeing better just behavior to keep the thing from spreading as fast. So as we're seeing it in the Northeast, for example, you've seen it crest over, and the infection rates are much, much different than they were early on. And you're seeing that the infection rates fall off. That's good news. And you're seeing the treatment regimens being different. And you're also seeing, because of the personal behavior, the people higher risk staying even more careful, the impact of the virus is still hugely hurtful to the people who get it, but not as bad outcomes. And so that's all good news as we wait for the vaccine, which is sometime out there over the next several months, and that would be good news. But until that's in everybody's arm, you're still going to have the drag of, will people go back to their behavior before? So that's the one thing. It's a healthcare crisis, and that's solved. What we need, I think, is pretty straightforward. You need more stimulus for the people. If you think about the analogy, we're all on one side of the river, and we all had to cross the river. We all needed a bridge. And so a lot of people are across the river. Certain segments of the economy, that are even doing better than they did before the crisis. Other segments are doing just fine. Take the medical industry is wholly back to normal now because the hospital capacity doesn't need to be held aside for the virus treatment. The housing industry is strong. The construction industry is strong. So those are across the river, so just let them go. Where you need help is restaurants and things like that. And so the next round of stimulus ought to be focused again on the areas that need the most help. And so PPP, the next round, should there be a second bite at the apple? I think so for the certain companies, because this went on longer than we thought it was going to go on. And so we need to help those companies. But I think they need to look at, small business, Unemployment benefits continue. The $300 is just going in the system now, frankly, because it took a delay to get it through. They continuing some supplement to help people maintain their standing because it's the right human thing to do. And then on top of that, then focus in on these other industries that are difficult. State and local government support, nonprofit performance venue support, things like that just need to be supported till we get to the point where the usage of them can come up and they can get back to normal and cross that same bridge. The rest of many people have crossed it. We got to help everybody else get across it.
So part of what has supported the economy has been the Federal Reserve, and particularly saying they're going to keep the interest rates at zero or just over zero until 2023 now, we're told. That's got to affect Bank of America and its business, particularly its lending business, as it is really affected by the yield curve. So how is it affecting you in terms of net interest income? Can you make it up on volume or on fees or in other parts of the business?
You can. You just have to grind through the down and to get to the up. And right now, this quarter, we told people it'll probably be at the low point, and it seems to, because the interest rate environment accelerated, and the Fed pushed the interest rates down intentionally, and that's what they're supposed to do, and they've done a good job. So, look, people always say, how are you going to deal with this? I said, geez, I've been CEO since January 1st, 2010. To now, and we've only had a couple years where rates were above zero, so we know how to deal with it, Bank of America, and we'll go out and work on it.
Yeah, it's fascinating. The Federal Reserve now says they might actually extend the hiatus on dividends and buybacks for banks. How important is that to Bank of America?
Well, our basic thesis, a quarter doesn't make a difference, but our basic thesis, we're continuing to pay our dividends, and we pay a dividend. Our capital levels are growing. Our stress test results in the old one, we have to do the new one they just announced yesterday. So we'll go through all the work. But the idea of the industry, people have to step back and think about it. What didn't go on in this crisis, which is the worst economic crisis that's occurred in American history, at a pace that may never be replicated, we hope. The banks had capital, liquidity, and through the work the Fed did about stabilizing the markets, in terms of the different facilities, many of which weren't used, but it was good that they were there to stabilize the markets. We've done what we were supposed to do. We supplied, capital. We supplied lending capacity to help people who were panicked go out and borrow and pay off their commercial paper and get their company in shape, and they've paid us back now. That was strong things. So, what the Fed will decide about the fourth quarter, we have a dividend and we're fine to pay it. But what they'll decide about the fourth quarter, I think people have to keep in a broader context. It'll be decided. But the broader context of Bank of America is we have excess capital. We're earning more than we pay out in dividends. Our capital levels continue to grow. We're taking on all the client demands that have come at us, and we're going to return that capital as soon as we're free and clear to do so.
That was part of my interview with Bank of America CEO Brian Moynihan. We'll have more on that next week as part of the Bloomberg Equality Summit, where Brian will talk about that $1 billion investment Bank of America is making in racial equality and economic opportunity. In the meantime, you heard Brian say we need more stimulus. We now turn to the woman who's been trying to get that stimulus for over 4 months right now. She is Speaker of the House, and she is Nancy Pelosi. So, Madam Speaker, thank you so much for being with us. You heard Brian say we need stimulus. But before we get to stimulus, there's also that little pesky thing like keeping the government going past the end of the month. Let's spend a minute on that first. There were reports we might have an announcement midday today. Are we ready to make an announcement on that?
Well, we're not ready to make an announcement right this minute, but we are very close to one. I have said for a while now that we would keep government open and we would have a clean continuing resolution. The Secretary of the Treasury has made a similar statement. Now we're just working out the details, but we hope to have it today so that we can bring it to the floor early next week and then go to the Senate, which usually takes a little bit longer in terms of their process, so that by the end of the fiscal year, which is September 30th, there'll be no question that government will be open.
Can you give us anything of a peek? How long will it extend it? Will it be to December or past then?
That is a question that we are still negotiating.
Okay, fair enough. I tried. Okay, let's go back to that fiscal stimulus. As I say, Brian Moynihan, the head of Bank of America, earlier today said we need more stimulus. We need it for the people who really are hurting right now. Where are we on that deal right now? You came in at 3.5, came down to 2.2. The Republicans were well south of that. Now we have a $1.5 trillion compromise. Where are you?
Well, I am at 2.2. I represent our caucus, the Senate and Democrats and the House Democrats agreed on the 3.4, the HEROES Act. I don't know why that the Republicans didn't think it American people were worthy of that investment, but they didn't. So taking some of the time off of it, not changing any priorities, but shortening the time at which the law would apply, we came down, took down $1 trillion, asked them to come up with $1 trillion, which they didn't. Then we said, we'll meet you halfway. That's at 2.2. But as your show has demonstrated, and if that was Brian, I couldn't see, said there are other issues that have emerged because the administration has had contempt for science, not done what the scientists have recommended in terms of testing, tracing, treating, distancing, sanitation, mask wearing, and the rest. We have not improved our situation from a health standpoint. So therefore, whether it's airlines or restaurants or small business and the rest, there's some additional needs. We say 2.2 is our figure. If we have to negotiate for some of these additional things, that would come out of the hide of our priorities we had before, but if that's what the traffic will bear. So we'll negotiate with the administration and the Republicans on this, not with ourselves. Now, the other point is that with all of this, quoting the chairman of the Fed, he has again and again said we need his monetary policy, yes, our fiscal policy. He said elected officials have the power to tax and to spend. It's really important that we have a substantial package. He also said that the state and local governments their fiscal stability is important to our economy. And he has also said that unless we get rid of the virus, we're never going to really solve our economic problems. So that's what our bill does. Many of the things that help state and local government tries to crush the virus, and also does so in a way that helps people, puts money in the pockets of the American people so they can spend. We're, as you know better than I, a consumer economy. So consumer confidence being very important in all of this.
Yeah, no doubt about it. You mentioned negotiating with the administration. The administration has sent signals, they weren't very subtle, saying they're interested in something like that $1.5 trillion compromise, which would have, as I understand it, $450 a week, not $600, but $450 a week for people, at least for 8 weeks, and also would have $500 billion for the states, not the $900 you asked, but not the $100 that the Republicans have said. Isn't something better than nothing?
No, it's a missed opportunity. It's a missed opportunity. And I have all the respect in the world for the work that our colleagues are doing. I have a large number of my members who want us to just go right back to the floor with the $3.4 trillion. I have some who have their suggestions about how you spend $2.2 trillion, but they also are saying with additional needs for airlines, transportation in other forms, restaurants, retail, and issues like that, that we need to maybe go higher than the 2.2, and then the 2.2 which we have on the table. Now it is, the state and local is critical. As I said, they have contempt for science, and that's why we're still in this unhealthy situation that we are. Sadly, this weekend we will observe 200,000 people who have died from the virus. Could we have saved them all? No. Could we have saved many? Yes. Science, science, science has the answers. And in our differences between the two, we have $75 billion to do that. That is what science, the academic community, higher learning, all the authorities tell us is needed to crush the virus. They have $15 billion, and they have said if we will compromise, we'll go to 16. Well, that's just not going to be. But state and local government, none of us could be functioning without state and local government having our healthcare workers, our police and fire, our first responders, our food workers, our teachers, transportation, sanitation. We could not be functioning without them, and yet the disdain that the White House has for them, largely saying, well, they're blue states, so why should we be helping them, is really problematic for us, because these people have risked their lives to save lives, and now they may lose their jobs. And when they do, services are reduced, taxes may be raised, but then these workers go on unemployment insurance. What is the good of that? You know, what do we think we're saving any money in that way as we reduce services and the rest? And of course, central to all of this is education. Every family in America is concerned about children, grandchildren in my case. Are their children going to be able to go to school safely? And that takes money. That takes money. So these are part of the debate. So it's not as in a little bit. This is not a check the box situation. These are the needs. We've come down halfway in terms of meeting you halfway, but the needs are only growing. They are not diminishing if we're going to help the private sector as well.
Madam Speaker, we talked with Senator Chuck Grassley, and one of the things he said, and we've heard from other Republicans as well, is on the question of state assistance, there's a fair amount of money left over from the CARES Act that hasn't been dispersed. Why don't we disperse that first? What's your response to that?
Well, first of all, it's not a fair amount of money. It's a small amount of money, and it has constraints on it that the administration placed. For example, the money that we want to do for state and local government has a formula that says for the outlays that you have spent fighting the virus, that's one allocation of funds, and the other is for the loss of revenue. And when we did the earlier bill, the administration would not allow the states to use any of that money for loss of revenue. So that's that packet. That's about $150 billion. And that's just simply not enough. And so for them to say that, now one of the reasons the money isn't spent is because the states don't have the flexibility to apply it to loss of revenue. The other reason is because states are saying, is there any more money coming? How I spend whatever is left for me depends on what is coming next. I never thought 4 months would go by and the disdain for state and local government would be so dominant in the value systems of this President of the United States that. Now, what the President says, I thought you were going to go to the old chestnut that they bring up all the time, not you, but they, and that is, these states, well, Mitch McConnell said it very clearly, let them go bankrupt. Let them go bankrupt? Let them go bankrupt? Is that a good idea? In fact, is it even an idea? I don't think so. Next, these are strictly coronavirus-centric outlays. They have nothing to do with any other cost expenses that states have or had from before, or pensions, or any of that. But that's what they want to say because they don't want to spend the money. Now, we know that it was a good thing that the Fed has done, shoring up credit so that the market is where it is, and that's a good thing. No complaint about that, but aren't the American people worthy of being shored up by trillions of dollars of fiscal investment as well as monetary investment that the Fed has made in terms of credit? We think so. We think so. And I don't know, I say to the Republicans, is it the price? You think it's too much money? Or is it the money? You just don't want to spend it here. You got other ideas like tax cuts for the high end, where 83% of the benefits go to the top 1%, but you've heard me say that before. Yeah. So here we are, and here's what the American people think. Poll came out yesterday. Who do you trust in terms of the coronavirus? Congressional Democrats, 49. President Trump, 30. They know what we need. We need a scientific response to this so that we can open our economy and our schools safely, and our polls, so that people don't have to choose between their health and the ability to cast their vote. That's another fight we're engaged in.
So, Madam Speaker, finally, as I say, you've been laboring in this vineyard a long time. That HEROES Act was more than 4 months ago now. You said you're going to keep your House in session until you get this done. Does that mean you think realistically you can get it done in the next couple of weeks?
Well, keep it done until they come to the table. We have, the ball is in their court, and we wait for them to come to the table. But our members stand ready to be here for the American people. And the American people are hurting. We represent them. I've represented my constituents for over 30 years. I love them like family. I don't want them to feel the pain, but I don't want them used either by, we'll send you this check with the president's name on it, that should keep you okay. Forget about 14 million children in America who are food insecure and millions of their families are about to be evicted, or the people from our state and local heroes who are about to, millions of them, to be fired if they don't get the resources, or the fact that we are ignoring the science that will crush this virus and take us to the next place. There are other issues, but those are some of the key ones.
Yeah, thank you very much. That was terribly helpful. That's House Speaker Nancy Pelosi. More Balance of Power coming up next, and this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for a check on the markets. Scarlett Fu is here with us, and it looks a little red to me, Scarlett.
Well, U.S. stocks did drop at the open, David. They've really struggled to move above the unchanged line. Not that it's quiet. I mean, it might look like that way. It might look that way, and the weekly numbers really depend on what happens today. But we do have quarterly options on individual stocks and indexes expiring today. So that means we got a pickup in volume at the opening bell. We'll likely see a surge at the close as well. There's also, David, a lot of lingering disappointment that the Federal Reserve this week did not really give investors the kind of dovish surprise that so many people had positioned for. And therefore, without an immediate catalyst, you now have the S&P 500 sitting at its short-term trend line, which is its 50-day moving average. I like what one strategist told our reporters on the Bloomberg News side, which is this is a market that's a conflict between uncertainty and fear of missing out, FOMO. And right now, you do have the uncertainty leaving tech shares underperforming once again. You can see that with the NASDAQ 100 lagging behind the S&P and the Dow, and certainly the equal-weighted S&P 500 doing better than the S&P 500. Tech is the worst performer today among 11 industry groups, and also for this month as well. It's happened all through September. For the week, if you look at the best and worst performers, we see a continued rotation into some of the beaten-up sectors in the market: energy, industrials, and materials. This is all part of the broader shift to cyclical companies, value stocks. We know that the backdrop here is that the economic recovery is uneven, but it is happening, and the latest data back that up. The University of Michigan Consumer Sentiment Report shows a slight move higher for the most recent month, and so that is lifting confidence in companies that are so dependent on the economy. And when it comes to materials companies, which have done very well of late, the weaker U.S. dollar is helping lift commodity prices and just puts a better spin on that group of companies overall, David.
So, Scarlett, tech has really led the news when it comes to the markets for a while now, and not in a good way. It's been really selling off pretty consistently. Do we have a sense, though, of how it's doing over the longer term? Because if you go back over the course of a year rather than a week or two, it's done terribly well. Is this just giving up some of the gains, sort of reverting toward the mean, or is there something more fundamental going on, do we think?
That's a really good point. I mean, part of it is certainly reverting to the mean a little bit, and perhaps people questioning just how much further it can go on. Obviously, you need some kind of upside surprise to keep the rally going. And with earnings season coming up some point soon in the next month, people are wondering just how much more upside surprise tech earnings can provide. We got a lot of that in the last quarter, but now people are starting to price more of that in. Also, you want to keep in mind the immediate catalysts, right? I mean, people are thinking ahead to perhaps increased regulation on these tech names. We heard this week that the FTC is looking to prepare a lawsuit against Facebook. That's going to be a drag on a lot of these big cap companies. That's not to say that there isn't reason to chase some of these names higher. Tesla, for instance, will be hosting its Battery Day at the end of trading on Tuesday, and that's seen as a positive catalyst for this company, even as it was denied a spot in the S&P 500. A couple of analysts upgraded their price targets on Tesla ahead of that event.
Okay, thank you so much, Scarlett, for that terrific market report. That's Scarlett Fu, our colleague. Up next, at a time when the world is focused on a pandemic and a global recession, former Treasury Secretary Paulson warns that there may be even a bigger challenge in front of us. That's coming up. In the meantime, we're also going to talk with the Secretary of Energy, Dan Brouillette, about what the Trump administration has done on energy policy for the first 4 years and what we could expect in the next 4 years. All that is coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. Minnesota has historically been a blue state, backing Democratic presidential candidates for nearly half a century. But today it will feel more like a battleground state, with campaign stops from both President Trump and Democratic nominee Joe Biden. Both are headed to the state to mark the beginning of early voting. The president will be in Bemidji, about 200 miles north of Minneapolis. Mr. Biden will swing through Duluth. Mr. Trump narrowly lost Minnesota in 2016. The United States is nearing a grim milestone. In the coming days, the U.S. death toll from the coronavirus will top 200,000. The U.S., which has 4% of the world's population, accounts for about 21% of global COVID-19 deaths. Experts warn that conditions are ripe for further spread, with schools and more workplaces reopening and cooling temperatures likely to push more socializing indoors. London Mayor Sadiq Khan says further measures may be announced in the next few days and weeks to contain infections in the capital as coronavirus cases surge. Official statistics show there were about 6,000 new infections in London every day in the week ending September 10th. That's more than double the week before. Prime Minister Boris Johnson's administration isn't ruling out a second national lockdown. The Kremlin's accusing colleagues of opposition leader Alexei Navalny of hampering a Russian investigation into his suspected poisoning. Navalny's colleagues took items from his hotel room out of the country, including a water bottle they claim had traces of the Soviet-era nerve agent Novichok that German authorities said was used to poison Navalny. Navalny's allies say they don't trust Russia to conduct a proper investigation. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Hank Paulson, as Treasury Secretary, led the U.S. economy out of what was then the biggest downturn since the Great Depression. Now he's focused on something he says is even bigger than the Great Recession of 2008, the current global recession, or even the pandemic. It's what he calls a, quote, staggering biodiversity loss. And not surprisingly, Mr. Paulson has a solution for this one as well, one that depends both on governments and on the markets. We welcome him now back to Bloomberg. So welcome, Mr. Secretary. It's great. You also call it a dramatic extinction episode. Give us a sense of what this problem is and how do we measure how big it is?
So, David, first of all, it's great to be here, and I don't have easy solutions out of this. But you're right. There's an alarming destruction of biodiversity, forests, wetlands, prairies around the world. And as you said, a staggering extinction episode, which I think has really grave, implications for humanity in terms of prosperity and the well-being of people on Earth. Now, we're just in, and to put some parameters around this extinction episode, that it's playing out at 1,000 times the normal level, which means that rather than losing 1 to 5 species a year, we're losing a lot. And, if this continues unabated, we'd lose, half of the animals and plants on Earth by mid-century. And, this would have an enormous economic impact. Now, we're just in the early stage, and, scientists and economists are in the very early stage of being able to quantify and measure the magnitude of what this means economically. But one thing we know for sure, the best way to hedge against these risks is to invest in nature. And the problem we've had for some time is our economic systems don't really measure nature. They don't account for the value of the services provided by the natural world. And that's because we have market failures. These services and nature is treated as a free good. And so that means that those who invest in it to conserve it aren't appropriately rewarded. Those who destroy it aren't appropriately penalized. And, so what we have done here with this study, and this study was done in support of an advance to a big UN convention on biodiversity, something that takes place every 10 years. This will be taking place in China. And what we did, which I really believe, breaks new ground, is we really drilled down on the capital flows into conservation globally, really focused on making the economic case for investing in nature.
Right.
And then we analyzed in great detail all of the different mechanisms and policies and tools that could be used to close this gap.
Right.
And to just lay it out very quickly, there's some good news and some bad news. The bad news is, as I said, we're losing biodiversity at an alarming rate, and the funds that need to be put into globally need to be invested in conserving nature are massive amounts. They're $600 to $800 billion annually. That's the bad news. The good news is there are a lot of tools and policies that can be used, and by far the least costly way is to not destroy our natural capital to begin with.
Right.
And so there are some things that governments can do that will require no money and will actually save money, which have to do with restructuring the flawed policies we have in terms of subsidies for agriculture, subsidies, forestry, and fisheries. So by restructuring those, that will close half the gap.
Yeah, and just to be clear for our audience, there's a report that's out from the Paulson Institute, your institute, along with the Nature Conservancy and the Cornell Atkinson Center for Sustainability. It's called Financing Nature, and this is all laid out very clearly in that report, which I commend to everybody. Comes up with that roughly $700 billion a year. You talk about a hedge as a practical matter. Can the markets take care of this on their own? We now have a lot of ESG funds. BlackRock's got a big one. Various people have big. Goldman Sachs, by the way, you may have heard of them. They have one as well. Could the private sector by itself take care of this?
No way. A matter of fact, one of the findings, which is very clearly, was that the private sector can do its part, but without a change in government policies, the private sector is not going to be able to take care of it. And, one of the things that's been clear to me over many years in terms of advocating for conservation, you need to get government to act, and government's not going to act without broad public support, broad business support. And to do that, you need to make the economic case. And the private sector has a lot of money that can flow into this area. What the government has to create the conditions for that capital to come in, has to create the proper incentives and financing mechanisms. So we lay out a number of those mechanisms, or change the subsidies. Or the other, I think one thing that the private sector could do that wouldn't cost a lot, it would make a big difference, and that we talk about in the report, is a different approach looking at the risks in the financial sector around investing and lending. And if banks throughout the world had screens, environmental protection screens, looking at the practices and principles and risks, and avoided funding harmful projects and infrastructure projects and making sure there was planning done in advance, this would make a big difference. This would make a huge difference.
So, Mr. Secretary, it strikes me that this is not a very popular point of view with some of the populists we have. And let's talk very specifically even about the Trump administration. If anything, the Trump administration seems to be going a bit in the other direction, as the Department of Labor now is proposing rules that really curtail the ability of fiduciaries with the risk of pension funds to invest in ESG. Is this a time politically where there's the political will to move in the direction that you seek?
Well, this is a time where it's more important than ever to make the economic case. And I think we can make the economic case that is going to change politicians' views. And there's a number of positive things we see happening. So we see the investing community looking at these risks much more carefully. Take a look at the annual report that Larry Fink, the chairman of BlackRock, put out. Take a look at what the Business Roundtable has put out more recently relating to climate change and social responsibility. So I think what the question that you posed really raises the stakes for us to make the economic case. And there is a compelling economic case to be made. And that's what we try to do in our report.
Is it particularly difficult to make that economic case right now when we do have something of a global recession? We don't know, I think, where we are. Where do you think we are in terms of the strength of the economy, domestically as well as around the world? Can we sustain the sort of investment you're talking about?
Okay, so I'm going to make 2 points. In terms of where we are, this is a very serious challenge, much more significant than what we faced during the 2008 financial crisis, because we're dealing with a disease plus the economic impact. And a lot of your question is going to be determined by our ability to control the disease, no doubt about it. But I think the government came in very early, and I was very pleased with the leadership from Stephen Mnuchin working with members of Congress on both sides of the aisle to come up with a very expansive, fiscal program, a stimulus program. I was very pleased with what you saw out of the Federal Reserve. We staved off disaster. More needs to be done. But your question really gets to the recovery. And I look at where biodiversity is most threatened. It's not in the United States of America. It's threatened here, and I'm unhappy with what I see happening here and the decline in birds in North America and so on. But where it's hitting the hardest is in some of the developing countries that hold most of our biodiversity. So in Latin America and in Africa. And those nations are hit very, very hard by the pandemic. And there's a big economic collapse there. So it's going to take a lot of money to come in and to get those economies to come back. And my point here is that a green recovery can be a big part of what they do. And if you look at one of the things that I've done with my institute is work with the Inter-American Development Bank and worked with the president of Colombia, Iván Duque, who's assembled a group of the other 7 heads of state that own the Amazon, and advising them on programs and policies that would help stave off some of the very destructive deforestation of the Amazon. And a point that we can make over and over again is that there's a lot of money that will come into this region if there are good conservation programs, and that those can help drive an economic recovery. On the other hand, if they revert to destructive policies, that this will discourage investment from coming in. And as long as you brought up the pandemic, I would say some of the, as we've tried to put a value on natural capital, and we've tried very hard to do that, and it's not always feasible. It can be very difficult, and so often it's valued at zero. But as we strive to put a value on it, there's some things that we can't put a value on, but are very clear. For instance, that there's no doubt that the destruction of natural capital has brought wildlife closer to humanity. And this really increases the risk of zoonotic diseases. And given the probable cause of COVID-19, that is something that I think deserves a fair amount of focus today.
Really important point. Mr. Secretary, it does strike me, you talked about the global effects of this. This can't be dealt with by one country or another. It has to be dealt with internationally, as you point out in your report. Can this be addressed without the 2 largest economies coming together, that is U.S. and China? Because right now we seem to be at loggerheads with China. You know China terribly well. Is there any possibility of a rapprochement that could help us address issues like this together?
Well, as you well said, the environmental issues, whether we're talking about climate change or whether we're talking about biodiversity or migrating birds, they don't recognize national boundaries. These are global issues. And for that reason, most of the work that my institute is doing on environmental protection is focused in China because they've got the biggest challenge and you can make the biggest difference there. And so there's a lot of good work right now being done in China around green finance, where it's a real testing ground for new financing tools and mechanisms. And we've been working on helping them develop principles and the right incentives to draw private capital into their green financing markets. And the reason we do that, it makes a difference there. But so much of the problem is going to be in developing nations where the next 3 billion added to the population is going to occur between now and 2050. And many of these nations don't even have municipal finance systems. So if what works in China it can be replicated around the rest of the world, I think it can have a big impact. Now, in terms of your question about the U.S. and China, this is a very difficult relationship right now, and it's escalating downward at a dangerous rate. We're dealing with a very different China right now. The views toward China have really hardened among Republicans and Democrats, much tougher on China. And I think they need to be. But we need to be smart about what we do. And we need to make sure that while we identify the areas where we have differences with China, where there are conflicts, we figure out how to deal with those and how to manage those while not precluding the opportunity and the need to work together to solve global problems. And I'd put climate change and the environment at the top of that, but you've got future pandemics, nuclear proliferation. There's a whole variety of major challenges, future economic growth, that aren't going to be solved satisfactorily unless we can figure out how to work, with China.
Yep.
And I think that's very important, and that is something that I'm very focused on and very concerned about.
Mr. Secretary, it's always a pleasure to talk to you, a privilege to talk to you. And I will say once again, this is a great report. I recommend it to everyone. This is Hank Paulson. He's former U.S. Treasury Secretary and former Chairman and CEO of Goldman Sachs. Coming up here, Secretary of Energy Dan Brouillette on President Trump's energy policy and what a second term might hold. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. One of the big differences between the candidates for president this year are their approaches to energy policy. Dan Brouillette is the steward of President Trump's energy policy as the Secretary of Energy, and we welcome him now back to Bloomberg. So, Mr. Secretary, thank you for being back with us. Before we talk about the overall Trump administration approach to energy, talk to us about this natural gas summit that you had, I think just yesterday. What was its purpose and what did you get out of it?
Hi, David. Great to be back with you. It was a great opportunity for us to hear from the industry and from policymakers around the world. We had with us many of the CEOs from the largest natural gas producers and some of the natural gas users, the utilities in particular, with us to discuss the state of the current market as we address the pandemic, but also to talk about the opportunities that are going to happen around the world. We had several ambassadors from around the world who joined us as well. And I just must say, it's a very exciting time to be in the natural gas business. We're looking at natural gas demand exploding all around the world as we move past the pandemic. And the United States is going to be a major player.
Is the potential production from the United States of natural gas also exploding? We've had it because of shale.
That's correct. The shale producers have made us the number one producer of natural gas and oil in the world. And as we've talked about that in the past, it's produced not only enormous economic activity here in the United States, but enormous economic opportunities for these companies, these U.S. companies all around the world. And it's provided us not only with energy security here, but national security as well. And it's created foreign policy options for this president and future presidents to the extent they want to continue to embrace this important industry. foreign policy options that they just haven't had in the last 3 or 4 or 5 decades.
Secretary Brouillette, you might have noticed there's going to be an election coming up shortly, and it's a good sort of time to figure out what happened in the first 4 years of the Trump administration with respect to energy policy, because the president certainly made this a priority for himself. And I'll give you one example. He said he was really going to be a friend to coal. If you look at the numbers, actually, coal production in the United States has gone down over that period of time. Has the president accomplished what he wanted to with energy in the first 4 years?
Yeah, I don't think there's much of a question about that. As we look at the production numbers on oil and gas, for instance, we've seen them top out pre-pandemic right around 13 million barrels per day, the largest number we've ever seen here in the United States. That's, perhaps a 3 to 4 million barrel per day increase over the course of the last 3 to 4 years. So an enormous success story there. And again, as I pointed out earlier, it's provided us with economic security, but also foreign policy options. When we saw some incidents happen with Iran and Saudi Arabia late last year, as traumatic as they were, they didn't impact the markets in a material or significant way. And that's important for us to recognize. And, I think it's a direct result of pursuing an all-of-the-above energy strategy. The coal, transition is still occurring. Folks are moving to natural gas and other cheaper forms of energy. That is, in fact, true. But there's still a bright future for coal, and we're finding it in things like rare earth elements. We're finding it in alternative uses for coal. I was just up in the western part of Pennsylvania recently. Saw a business there that was remarkable. They were making decks, roofing materials, unimaginable things just a few years ago out of coal. So there is a high value business proposition for coal in America and indeed around the world.
At the same time, as you say, it's an all-of-the-above approach that you're taking. It includes alternatives. It's not just fossil fuels for the part of energy. And if there's another 4-year term for President Trump, what would you think about the crossover? How much will it shift increasingly over to renewables?
Well, the market drives so much of what happens with regard to renewables, and we're going to continue to see innovation drive this industry as well as other industries in the future. And that's a fundamental difference, I think, that this president has brought to this administration and to this government. We choose innovation over regulation. So we want to encourage the marketplace to develop these technologies, to bring them to market as quickly as possible, as efficiently as possible, price them accordingly. And, the uptake from consumers is just going to drive the ultimate demand. But, in terms of what we do here at the Department of Energy, we are advancing the technologies around these alternative energy sources. We've developed new fuels for smaller micro reactors. They're 1 to 5 megawatts in power. They're accident tolerant, meaning you can't have a Chernobyl-type event. And they're non-proliferant, meaning you can't make a warhead out of the fuel source. So those are the types of technologies that we want to see move forward. And the reason we want to do that, David, is because these are baseload electricity generators, and the renewable technologies that we have today are entirely dependent upon the provision of this baseload power. And until we get to a point where we have grid-scale battery storage, natural gas, coal, nuclear, hydro, all of the things that provide baseload electricity in America, those are going to be what drives actually the renewable uptake all across the country.
Secretary Brouillette, there's been a lot of talk about infrastructure investing. Not much has really been forthcoming. Is there a role for the government in terms of infrastructure for both storage and transmission when it comes to renewables?
Yes, I think there is, and that's what I alluded to just a minute ago. With regard to the battery technologies, we launched a brand new facility out at our Pacific Northwest laboratory in Washington State, and the goal there is to allow this facility to do grid-scale, large-scale battery storage research and development, and it's an exciting project that we have. It's going to allow us to look at battery storage capabilities that exceed 20 megawatts, and that's an enormous step forward from where we are now. Combined with that is going to be a lot of R&D work being done on rare earth elements, and more specifically, perhaps substitutes for some of the rare earth elements that it is now done. That's a market now dominated by China. So if we can either develop the elements here through, perhaps coal ash, or if we can develop substitutes for those elements, then we can move battery technology forward very rapidly.
Mr. Secretary, thank you so much. It's always a delight to have you with us. That's United States Secretary of Energy Dan Brouillette. And a program note, Wall Street Week tonight at 6 p.m. Eastern Time with Larry Summers and former Fed Governor Dan Tarullo. That's coming up, and this is Bloomberg.